Hey guys, Bix Weir, roadtour.com. Let's talk about earnings season. I have been jumping up and down saying, what the hell are these companies going to report for earnings? Last week I told you about the SEC delaying the need to announce earnings, and most companies were like, oh, no, we're going to still do it. So now we're getting into the time when companies actually report their earnings. This was the post from last week. Will companies in the Dow report earnings as usual despite COVID-19's disruptions or delay them because they can? SEC extends the deadline to provide certain disclosures such as earnings by 45 days. 45 days. The SEC said you don't even have to declare that you're insolvent for 45 days. But then what? How much are the rules going to change in the next 45 days such that they can disguise what's going on, especially the banks? Massive leverage, massive derivative books. All of them are insolvent right now. All of the too big to fail banks. It is such a gigantic cluster. And no, this hasn't been priced into the stock markets at all, or the bond markets or any markets. This has been swept under the rug because people don't even want to think about it. And as we could tell from this article on Zero Hedge, quote, no one has ever seen this before. With companies and analysts flying blind, first quarter earning massacres loom. These analysts are not rocket scientists. As a matter of fact, they're idiots. They couldn't make it in real business, so they analyze other businesses. Vast majority of them. Ridiculous. And they don't know what the hell to do. How do you analyze a company now? There's even guys saying, well, we'll just take out the first quarter and we'll put all our regular projections on second, third, fourth quarter. Are you kidding? The world has changed. It'll be probably in my timeline I have next month that these guys realize that the reversal of globalization has happened. It'll never go back into the bottle. We will never have globalization again in the way we had it just a couple months ago. So right now, nobody knows what the hell's going on. Everybody's saying, oh, it's down so much, buy it. Buy the stocks. Buy. Are you kidding me? What's the PE ratio going to look like for these stocks? How is this going to affect the future? It's not going to just all of a sudden be like before. It will never be like before. Anyway, it's appearing as though Wall Street hasn't quite prepared for what is coming down the pipeline. You heard it at Road to Ruta months ago. As companies across the board prepare to blindside analysts with upcoming earnings reports. Walgreens this morning was a perfect example. Everyone believed they were a company that was coronavirus proof. Yeah, because you got to go in there and get your masks and your sanitizing stuff. And yeah, Walgreens, right? Yet the stock fell after the company admitted it was still seeing decreased foot traffic. Yeah, nobody's going outside. Nobody has money to spend either. Even after the company beat its earnings estimate. In the age of coronavirus, almost all analysts are flying blind. And this is likely to lead to some shocks from earnings reports that will be felt across the street. Many companies have already admitted publicly they have no clue where the pandemic is going to take their business. For most companies, you just can't shut down for a month or two. You're insolvent. You have fixed costs that keep going. Which raises the question of how there's going to be any price discovery, not from the analysts trying to set estimates, but from the market trying to price companies as a result of their first quarter numbers. Youssef Abbasi, global strategist at Intel FCS Stone, told Bloomberg on Thursday, quote, things are changing dramatically day by day because no one has ever seen this before. It's almost like calling out an arbitrary number because the fundamentals are broken. And they will remain broken, my friend. It's not a question of whether or not there will be a drubbing across the board for all corporations. The question is, how bad is it going to be? Only 17% of all earnings estimates across the S&P 500 were revised. Are you kidding? With all businesses shut down, that affects everything. And only 17% revised their estimates. The rest are saying, well, we don't know. We're going to blame the virus. Everybody's going to blame the virus. This compares to an economy where almost 100% of businesses are shut down, and where those that aren't shut down will definitely be feeling an impact. Jonathan Golub, chief U.S. strategist at Credit Suisse, said, quote, "While analysts are updating their numbers much more frequently than normal, their estimates remain stale. This pattern will likely continue until the start of earnings season and beyond." In addition to having no clarity on individual companies' earnings, analysts have little clarity on how the S&P is priced as a whole right now because of the E part in the index PE ratio. It's up in the air. 54 names in S&P 500 have withdrawn guidance since February. Keith Gaggle, a portfolio manager at Gradient Investments, said, quote, "Any name's got 5 to 30 analysts setting the consensus, but we can know whether companies are underperforming relative to estimates, but now everybody's taking a stab in the dark." Gaggle said that he is instead going to be listening to the tone of the executives on each company's respective conference call. That is how you're going to value the S&P and your portfolio and all your clients. You're going to tell them, well, he sounded like upbeat. He sounded upbeat. So I'm going to keep his rating at buy. Oh my God. What has the world come to? Again, to look back at our Walgreens example this morning, it was this commentary that moved the stock, not the numbers. Bryce Doty, senior portfolio manager at Sit Investment Associates, said, quote, "The earnings coming up are probably going to be the most unpredictable or worst estimates we've ever seen in the history of the country. It's a completely different world. Anyone who lived through the financial crisis can't think the way they did back then. It's a whole new ball game now." Wow, he kind of gets it. And despite the appearance of a haircut in the S&P PE multiple, the broad range of outcomes going forward almost assures significant more volatility in the months ahead. Aaron Clark, portfolio manager at GW&K Investment Management, has looked deeply at the worst affected industry, including leisure and travel, which are gone, basically. Quote, "It's more balance sheet analysis." It's very good. You look at their fixed costs, you look at what they owe, and when you're basically saying, okay, you can predict the day they're going bankrupt. Quote, "It's more balance sheet analysis than income statement analysis. Have they tapped their credit line? How much liquidity do they have? What's their interest coverage? When is their debt coming due?" he said. Paul Markham, global equity portfolio manager at Newton Investment, agreed, quote, "What you really do in this environment is disregard the first quarter of 2020 and then normalize the earnings." Oh my God. He cannot be serious. You think everything's going to be normal second, third, and fourth quarter of this year? You are insane, Mr. Markham. He concluded, quote, "What would be more appropriate is to take the final 3 quarters, annualize those for the year, or to replace the first quarter with something which is very significant haircut, but not a negative or low earnings number, because it's not necessarily going to be repeated." My God. And Zero Hedge says, and to which we reply, quote, "Sure, Paul, what kind of alchemy do you employ when Q2 comes up and Q3 turns out to be worse than Q1? What? All the models should be tossed out the window. We are in year zero, and first quarter is different than last year forever. It's ever been. Second will be the same. Third, fourth, fifth. We will never go back to the way it was. It's going to be better at some point, but it'll be very different. The companies that you knew and trusted will be long gone, and new companies will spring out. Those who are able to adapt, to be agile out there, to be dynamic, changing with the environment. The old ways of doing business are long gone. And stock market does not reflect that at all right now. At all. And probably never will. When it freezes up and they all of a sudden shut it down. Do I think they'll restart it? Yes, at some point. I don't know when. I don't know what it will be valued versus. I do know that the high frequency trading will stop. The derivatives related to the stock market will stop. It will be a whole new world, and we're going to need a whole new type of analyst to analyze the future of Stocks, bonds, fiat money, if it's out there. Probably cryptocurrency. Gold and silver. Who knows? When the comet shuts down, it's anybody's guess where the price of silver will go. My first stop, $600 an ounce. Where's it right now? 14. Can you buy any silver in the world for $14 an ounce? You can buy electronic contracts. And theoretically, you can take delivery, but as we saw from gold last month, good luck getting your gold. Good luck getting your silver at $14. You're not going to get it. You're going to see force majeure everywhere in every market. And that is on my timeline as well. If you want to join the road to Ruta, go on the private road, hit subscribe today, and you will be sent one Veritasium token, the lottery ticket of the future, and the coolest coin ever. Just got a whole bunch more in. We're ready to rock. It's a Ruta coin jumping up and down on the silver brick road with a little cave of gold side of the Grand Canyon. You guys know the story. This is Bix. I'll talk to you later.